Hello and welcome back to Crypto Bits. I'm your host, Brittany, and today we have a very special guest joining us, Mr. Kurt Wuckert Jr. Kurt, welcome to the show. Do you think you could start us off by telling us a little bit about yourself and how you became involved with Bitcoin and cryptocurrencies?
For sure. So I have a long history in IT and cybersecurity, and just computers in general. I was always a bit of a computer nerd and an entrepreneur. So I've been self-employed since I was 19 years old, and just by circumstance, did a lot of stuff with my life pretty early on. And I was always like, I'll give it a shot to basically everything. In 2012, I was pretty deeply embroiled in end the Fed sort of rallies and that kind of stuff in Chicagoland. And a guy that I knew pretty casually, not like a close friend or anything, was like, "Hey man, can I pay you in Bitcoin?" I owned a printing company at the time, and he wanted some posters printed for a rally or something. I didn't go. So, he told me Bitcoin is like video game money, and it wasn't a big job. So I said, "Yeah, sure. You can pay me in your internet money or your video game money." And honestly, the rest is history. I didn't get it at the time. He helped me set up at the time like a full node wallet. And I didn't get it, but I dug in probably 6 months later. I kind of jumped in and was like, okay, I should figure out like what's actually going on here. So
Right.
I remember watching videos. Adam Kokesh was a big influence, and Roger Ver really early on, talking about the power of frictionless digital gold and all this stuff. And I was like, oh man, that's awesome. This is incredible. And so I got in. I was like, oh, I'll be a miner. So I got into doing some mining and a little bit of development stuff. We were going to build out an SPV wallet, me and some friends, some business partners and stuff. And basically just fell down the rabbit hole. And I've been here ever since. I've been involved in business, like hardware, business development, networking. Like I said, my background is actually cybersecurity. So for me, it was like, oh, let's just build a bulletproof network and wallet infrastructure. We'll do all this different stuff. And I've just kind of been involved in consulting for really the whole time. And then I got really embroiled in the scaling war. To me, it was always obvious that Bitcoin should scale on chain. And that's when I became the bad guy to a lot of people. So just kind of that's most of how I got involved anyways.
Right. Well, I also heard that you're a chief historian at CoinGeek. You definitely like your job, I'm sure. So, we have a lot of new people that come into the space all the time, especially during bull runs, just the hype and everything going on. And, on the flip side of that, there's still people kind of sitting on the bench, the bleachers, so to speak. They're kind of interested in it, like, oh, what is this Bitcoin cryptocurrency thing? But they're still timid, and what would you say to somebody who may be interested in investing in cryptocurrencies, but they're still kind of sitting there on the sidelines? What do you think constitutes real value in the space?
Well, those are two big questions. So
Yeah.
I'll try to parse them down really small.
Right.
Basically, you can never do too much research. I've been involved with Bitcoin for over 8 years. Gosh. So and it's like I learn new things all the time, and like I keep myself dug in. Like I'm a big fan of the Bitcoin protocol. I'm a big BSV supporter because I think it's where the most actual research and development is being done on the fundamental Bitcoin protocol. But there's all kinds of crazy stuff going on everywhere. Like I find the work being done fascinating everywhere. And so I try to not live in the bubble, even though I'm very much an advocate for a one chain to rule them all sort of solution. There's still lessons to learn from the way that people deploy even second layer stuff and the way that they handle wallets, or the way that like a lot of these Ethereum based forks and things. So this is everything from like Polygon to Binance Smart Chain and all these things. It's like, okay, how do they do what they do? And I think it's really important to dig in and figure out how to do what they do. And I'm still at the point where I still don't like how they do what they do, but at least I know, I'm not just
Right.
Make a decision about all kinds of things based on that. And I think the thing that people really need to understand is that value and price are not the same thing.
Right.
And there's ways to make money. In fact, you almost all in every bull run, you make the most money by being um the most degenerate or the most just like ridiculous. Like it's always like the dumbest investment that makes the
The
most
most
gain during
money,
every.
right?
Yeah. So when I talk about like, wow, fundamental value and like it's like talking about things that are, have all this incredible stuff going on. And like in 2017, that was Verge. The Verge cryptocurrency
Mm,
was like, I think it outperformed everybody, or it was one
right.
of the top five of like the entire bull market. Did some outrageous 100,000% gains or whatever if you bought at the bottom and sold the top. Um, so those are two different questions. Like how do you get the most value out of cryptocurrencies? Um, build something on them. That's actually what brought me to BSV primarily is this notion that something should exist outside of the speculative value of these assets. Like I might do great by buying Cardano or Neo or some other thing, and they explode in value, and then it's like, oh, okay, now I've got an extra 100 grand lying around or whatever that I
Right.
can do something with. But ultimately, if I were to say like, well, I have this business idea that requires 50,000 transactions a day, and I need them to settle this way and that, and I need to use this network to actually create value with the network. And then you realize like something like Cardano, like smart contracts don't even exist on Cardano yet. And like, I don't
Right.
know how many people know this, but like you cannot program a token on Cardano. And so if I wanted to build a token project or anything, build some kind of business that utilizes NFTs in some way or smart contracts in some way, can't do that. Cardano is not an option.
Mm,
So that's why it's important to understand why you're here and what your real goals are. And then when you figure out what your goals are, stick to them, because that's a lot of people get sort of washed around with, I'm going to join the coin of the week, but by the time they get into it, it's because they've heard the hype, and that means that
right.
most of the gains have already happened and that kind of thing too. So, and that's what most people want. Most people want to buy something low and sell it high,
Right.
and so they're always looking to sell to the greater fool. And I don't think there's anything wrong with trading with that in mind. I don't think it's immoral like some people do, but ultimately, it's the only market in history where almost all of the volume and liquidity and business being done is trading. But
Mm,
there's no other, if you look at the stock market, like GlaxoSmithKline actually ships billions of dollars worth of drugs to the world. And like that's why their stuff has value. And in the blockchain space, it's like, who's using Litecoin? You know what I
right.
mean?
Right.
Like it's
No,
not being
definitely.
used for almost anything, and the fact that it's got the value that it does, indicates how little people understand what's actually going on. They just see it as like I don't know, I'm going to ape into it and try to sell it higher, and that's it. So basically, be careful, stick to a plan, and don't be afraid to take profits. If you want to get in and be a trader, by all that's fine, but you know realize that these things do happen in cycles. Protect your purchasing capital, and that kind of thing is crucial.
Right. No, I definitely agree. And there definitely is a big difference between investing and trading. And I don't think enough people really realize or understand that concept. And like you were saying, there are so many newer projects and great projects out there. I feel like when the bull markets happen, people just come in waves, and then they make like a board of all of the top coins that people are talking about, and then they take a dart and they toss it at the board, and then all of a sudden that's the coin they pick, that's what they're investing into, and they're not doing any actual research on what's how does this actually work, what's actually what are the fundamentals,
Yep.
and what might you say to somebody like that? How would you explain blockchain and like proof of work versus proof of stake?
um so a lot of people, they only think of them in computer science terms, which I think is a mistake. Like proof of work, I'll explain first, and then I'll move to proof of stake. But proof
Right.
of work uh, was designed to mimic what the world should look like economically and politically in a truly competitive and fair world. So what Satoshi Nakamoto did is he looked at reality and said, okay, the people in power, they have power because they can force people to participate in their power structures. But the people that are inside the power structures don't have a way to necessarily attempt to compete with the power structure and make it better. And so what proof of work actually is, like, there's all kinds of computer science conversations that can be had about what it is, but what it truly is it is the competition among potential kings. And so in a proof of work system, the person that has the most value or the most control over any system is that thing that is creating the most value in the system. And the second they begin to fail, the next best one then becomes the new king, essentially. And so proof of work is miners, real, true, full nodes competing to be the best at both competing and cooperating. Because in a network like this, they have to do both. If I am only good at finding blocks, but I'm not good at propagating blocks out to other people, then I'm not actually the most valuable node in the network. Right. So it is the node that is the best at doing both of those things. So I need to be the best competitor, but I want everybody to say, I want to also receive these blocks from Kurt because I like him. And it benefits me economically and all these other things. So right. Proof of work is a truly competitive model for creating the most possible value in a system. And I'm a proof of work maximalist. I think it's absolutely the only way to really make a sound money system. Proof of stake, on the flip side, is much more like the equity model. It's like stock. So if you are investing in a network that is proof of stake, you are saying, I own X percentage of this network, and that signals how much I care about the network. But the problem is that whoever the biggest stakeholder in that network is doesn't have an incentive to have to increase the amount of competitive value that they're willing to create in order to stay number one. So number one remains number one, and they are receiving more payouts for being number one, which means that they're on like this hockey stick curve that nobody can really catch up to. Right. And so they have every incentive not to destroy the network, because their value is in the network, right? But it's much lazier. It's sort of like, well, nobody's ever going to pass me up anyway. So you know what? Why do I need to do anything? Like, somebody else should want to compete. They should basically grovel for proximity to me. I'm this valuable node. It's kind of like the way that kings are today, like in the real world. It's like, if I could just become friends with like billionaires and presidents and all these things, like I'd be in a much better spot. And that's really what the proof of stake model is about. And those are the economic systems that they mirror. So proof of work really is it's an attempt at greatness and truly fair economics based on whoever's the most capable. And proof of stake really is it's a return to the old world. The entire world today is built on millennia worth of actual proof of stake systems.
So definitely proof of work is the way to go, in your opinion.
Absolutely.
Definitely. Well, since you've been in the space for so long, you've been through some bull markets, you've been through some bear markets, and it seems like every time we go through a bull market, we see a whole bunch of brand new projects come in, and then crypto winter comes, and a lot of those newer projects just don't make it, as we were talking about before. So in your opinion, what are some good projects aside from VSV that, because there's newer projects like Solana and Celsius out right now. So in your opinion, what are some good projects that you're kind of honed in on right now? And which projects, newer projects anyway, do you think are actually going to make it through the next bear market?
Yeah, it's a really good question. I think the hard thing to figure out is who's actually serious. There's so much money to be made by just having really good marketing and then having a very, very basic product that does something. And like I said, like Cardano, for example, like it's predicated on, well, Charles Hoskinson was a co-founder of Ethereum. And so there's this assumption that Cardano is like Ethereum and then it's going to be this great thing. And like, I don't know. I don't take him very seriously at all. I don't take the project very seriously. And it's hard to say who is being serious because there's so much subterfuge out there. There's so much smoke and mirrors and just kind of, hey, that's going to be the new big thing. You mentioned Celsius, for example. I think Celsius is actually a really interesting business model. I appreciate the fact that they're a legally registered entity. They've got their money transmitter license. Like, I've actually interviewed the founder. This is probably going back 3 years ago now. And Alex Mashinsky. and he does a Friday AMA every week, and he answers people's questions. And I don't love everything about the business model. I don't love Ethereum, which is what the project is built on. I think it's an untenable project in many ways, but I think the Celsius business model actually is a good business model generally. And so I would like to see him move to, frankly, BSV, but I'd like to see him move to something like, that isn't going to require him to do a major reshuffling of his business again, because it's going to have to happen at some point.
Right.
In fact, every time there's an upgrade on Ethereum, the London hard fork, for example, is happening imminently. And so everybody with an Ethereum project is going to have to pause their project. They're going to have to refactor everything. They're going to have to get it ready to run on the new fork. And like, that's a really silly thing for businesses to have to do, especially when something like PSV, for example, is already completely scalable. You could build anything and everything on it and never have to do that work again. And so when I say like what projects will survive, something like Celsius probably will survive. I also have a lot of respect for some of the old mainstays. Like I like to point out the Dash community a lot. They've been focused forever on being a scalable digital cash, and they do it well. Like they actually work. They've actually invested in trying to get themselves into point of sale systems around the world and all these different things, and it's not my favorite project for various reasons. I don't like their masternode governance model, but I respect their hustle, and I respect the fact that they have a very clear goal and that they've been working toward it vigorously for years and years and years. Like it's not some exit scam. Even at some point, if there were scammers involved or all these different things, I think that they've proven that they're here to actually accomplish a mission, and therefore they're an actual competitor in that space. And so, I think they deserve kudos. Whether or not they're a great investment, totally different story. Or things like Solana. Like Solana is pushing a lot of boundaries and stuff too. So, we'll see. I think Solana actually could be quite successful, although they're very, very niche. They're very specifically focused on being good for gaming, but not much else. So like they're heavily specialized basically. So those things are interesting. I think there will be a pretty long season where Ethereum and BTC will remain because they have so much buy-in and big communities and big liquidity and that kind of thing too. But they ultimately can't take on another round of bull run participants. I mean, we've saw both networks basically brought to their knees again this bull cycle. Like $800 to create an Ethereum wallet doesn't make for a great user experience for somebody who's like, hey, I'm going to join the future of finance, and that's silly. So yeah, I don't know, but it's hard to predict. There's a whole lot of stuff, and there's about 10,000 projects out there now too,
right? So. There is, yeah. Well, I have a cousin who recently started investing in cryptocurrencies simply because it was available to him on Robinhood. And I had to get on to him and explain to him, look, not your keys, not your crypto. We had to go through that whole big thing. And then of course, his next question was like, okay, well, if I can't hold it on an exchange, if I buy it on somewhere like Coinbase, then where do I store it? Where do I keep it? How do I keep it safe? And I was telling him, well, there are hardware wallets. But as somebody with a background in cybersecurity, what would you say is the best way to hold and store and keep your cryptocurrency safe? Especially when places like Ledger have been hacked in the past,
Sure. I think it really depends. I mean, if you're going to be doing a bunch of different things, like there's a very different way to store your Ethereum than you would your Bitcoin, for example.
Right.
But what I tell most people is actually to use an insured custodian. Okay. So actually something like Coinbase, like I don't like Robinhood, but something like Coinbase probably does make a lot of sense for somebody that is just, doesn't understand private keys, doesn't understand the responsibilities involved. Like, Coinbase, not to say that they won't just dissolve or something also, like there is definitely a risk there, but it really depends. It depends on how much money you're putting into a thing. It's like, if I drove a 25-year-old Toyota that was worth $2,000, like, am I going to invest in security systems? And it's like, no, it's my beater. Like, maybe I lock the doors, maybe I don't. But if I have nice things and premium things, like, yeah, I'm gonna invest in better locks and stuff. So what I think people should do is mostly spread things out across different risk profiles. So if you're one of these whales, and some of these people do have, $10 million or whatever stored on keys, like, by all means, like, generate an offline air gapped paper wallet situation, like, put it into steel and lock it in an airtight box, and whatever, split them into thirds and put one in a safety deposit box and bury one in the desert, and do all the crazy stuff that people do. But
Risk
for most
management.
people, yeah, I mean, for most people, like, actually an old cell phone is a really, really great tool. So wipe an old cell phone. Like, let's say you have an iPhone 6 or something sitting around, wipe it, update everything, get everything up to date, and then install the wallet of your choice, and then take it offline. And you can still receive to it. Like, just make sure you receive one transaction by checking it on the public blockchain. Like, you can use a block explorer, but then the phone never goes back online. A lot of people don't realize that cell phones actually have much better security than typical computers. And then if that phone never goes online again, then there's virtually no risk. The only risk would be, the only risk would be if somebody, puts a gun to your head and they make you unlock your phone, and that risk always exists. That exists in every system too. And in fact, what most people don't realize is that most quote unquote hacks are not technical in nature. They tend to be social in nature. So if somebody tricks you into trusting them, or tricks you into giving them information, and then it's more detective work than it is computer work, basically. And so, just having things spread out a few ways. I don't think it's a bad thing to have a Ledger Nano and a cell phone backup, and keep some on Coinbase or wherever, whatever custodian you want to use too, because who knows, like, you may screw something up. You may screw something up with one set of your keys, and you don't want to lose all of your Bitcoin because of that. So basically, diversify your security, and diversify your own risk based on what you're holding. So that's my advice.
Very cool. I would never even have thought about the old cell phone. So that's an interesting idea right there. Cool. But I guess moving on to a different topic, recently Elon Musk was talking about money transmitting laws. Do you think you could explain how the BTC Lightning Network works and how it pertains to money transmitting laws?
So I think the best way is to describe an abacus. So the way an abacus works is you have two pieces of wood typically, and then there are bars in between, and then there's little beads on the bars, and it's used for doing math back in the day. But it's actually how Lightning Network works. So if you create a channel, you're putting Bitcoin on one side of the bar, the middle bar. And if I'm trying to send you some Bitcoin using Lightning Network, if I'm not the node closest to you in the network, it's got to bounce through somebody else's node first. Okay. But rather than that person just grabbing my Bitcoin and passing you my Bitcoin, what they are actually doing is they are receiving my Bitcoin, because they are locked into this abacus, basically. So I'm pushing a bead across, and then they are bouncing a different bead past them, so a different Bitcoin. So what they are doing is they're an exchange at that point. And every single bounce on every single node on the Lightning Network is an exchange. And so you are exchanging money for people. And if you don't have a license and insurance and all the various things that are required for you to be exchanging money for people, especially at scale, volume, then let's hope your OPSEC is really, really good. So this is why you have people like, I'm behind Tor and VPN and all this. Like, nobody's ever going to figure out it's me. And that's, that's fine. That's, super cool, I guess. But then you're living in the shadows, and then your money becomes problematic that way, because it's like, well, now when I want to spend my money again, like I've tainted all these different things. And ultimately, I think something like Lightning Network actually isn't even intended to work in a decentralized fashion. I actually think that it's intended to be run by big companies, because big companies won't have an issue becoming money transmitters. So this would be Square, for example.
Right.
They're investing heavily in BTC infrastructure and Lightning Network stuff because they want to be everybody's node. They want to do that exchanging and be that Lightning hub. Now, that's all well and good, except for the Lightning Network was predicated on remaining decentralized because the base layer of BTC was supposed to remain decentralized because it's important for there to be all these nodes everywhere. But Lightning Network really defeats that purpose because it doesn't work well that way, because it becomes increasingly complex as it grows. Because again, every member of the network is exchanging things. Like there's a lot going on there, and there's no proof of work. So there's no incentive to do it well. And so you're taking on this risk, this regulatory risk and all these things, and your reward is infinitesimal to do it. So I don't love the game theory of Lightning Network at all, frankly.
I think that kind of brings me into my next question. A lot of people talk about decentralization, and it's become like a synonymous word used with Bitcoin. So, and not only just that, but a lot of people believe that Bitcoin is like anonymous, and that's another thing that's kind of, I guess, a misnomer. I don't believe that it's as anonymous as people are led to believe. So could you explain what decentralization actually is, and is BTC actually anonymous?
So decentralization, I would argue decentralization doesn't actually exist. There's not a hard and fast definition for the word, first of all. So are 4 nodes on a network decentralized? Technically, the answer is yes. Technically, it would be at 2 because there's not one. There is not a single point of failure, except on a communications network, you need 2 to communicate. So do you need 3? Is the network decentralized at 3 nodes? And
Right.
so we're talking about a sliding scale. Like, is it more decentralized if it gets bigger? And the response might be no, because it becomes this problem of resources and this ability to do eclipse attacks on whole portions of the network, depending on how loosely they're connected as peers. And basically, I would argue that BTC is engaged in what's called decentralization theater. Much the same way as like when you go to the airport and they act like, everybody's liquids might be bombs. So they have you dump your liquid all out in this one thing and it all gets mixed together. And it's like, oh, okay, well, if these things were actually, dangerous chemicals, you couldn't do that. So this is security theater. This is supposed to make me feel like something is happening, right? And BTC is a lot the same. It's a lot of redefining decentralization to mean whatever you want in a given situation, because it's good marketing, and people resonate with this notion that it's unstoppable money and it's all these things. And that's cool because a lot of people, have their own political reasons for why they're involved in Bitcoin in the first place, myself included. But it just isn't really practical. Like, the reason I say that decentralization doesn't exist is because if I were to commit to the Bitcoin Core repo, commit code, and change Bitcoin in some way, I'm actually taking, at least probably, something of a fiduciary role over the network. I'm saying I am going to change somebody's monetary system in a way that I think that it should be changed. And that's like me messing with your portfolio. Like, if I don't have your permission and the licensing to do that, I'm forcing risk upon you.
Right.
Like this Taproot upgrade, for example.
Right.
Do you get to vote on whether or not Taproot is added to BTC?
Me personally, no.
No. And so even if you're a big BTC holder, somebody else is making a decision about changing the protocol. And the only practical way that you have to resist it is to simply sell your Bitcoin. And then you don't have that born risk to that change to the monetary protocol. But that's just bonkers. Like, the fact that somebody can change like a trillion-ish dollar, monetary networking system and say, oh, well, I'm just an anonymous person in a GitHub repo, though. It's decentralized. And the fact is no, it's not. You are taking a fiduciary role over people's money. And when you do these things as an individual, when you don't have like an LLC, for example, that's committing these sorts of changes, then you are taking on all of that risk. It is an unlimited liability situation. And if you break the network, you're the person liable for it. Or if you've broken some other money transmitter law or regulation or whatever, that falls on you as an individual. And so we haven't seen these regulations come down on people hard yet, but it has started. Like, we're starting to see the Binances of the world and some of these things, like, you're not allowed to margin trade over here. You're not allowed to have a bank account here. You're not allowed to do all these different things. And they keep clipping at the wings of all these things because these people just frankly are breaking the law. And I understand that it's political, and that's kind of the point, is that a lot of people are trying to uproot things and disrupt political systems, and that's all interesting, but it's a lot of risk.
Right.
So
well,
all that to say, yeah, go ahead.
I'm sorry. No, I'm loving everything that you're saying. I mean, it makes perfect sense. And it's speaking about regulations, you're talking about, all these different types of, on-chain type of regulations, and just from the government type of regulations, we're hearing a lot of new proposals come out from like the Biden administration talking about, increased capital gains tax and having exchanges report transactions over $10,000. I mean, with everything that's happening over there and everything that's happening over here, it really seems like it's hindering growth, so to speak. Or so what? Yeah.
Oh, it is. No, I honestly, so I'm very much a political libertarian. I don't consent to being governed really at all. So I personally believe that we need to fight for our liberty, plain and simple. Now, the way that we do that is entirely up to interpretation, but I think putting yourself in a situation where you are screwed up because you've broken some law that you don't understand, and then you're putting yourself out there to be arrested or fined or all these different things, like that takes you off the playing board. And so I tell people, some people are like, oh, Kurt's like kind of a regulation hawk, and I'm like, no, I'm not. I actually hate the I hate the IRS. I hate FINRA. I hate
taxation is theft.
Right, taxation is theft. This is something I do not consent to. And so, but I think there's a good way to fight these things, and there's a bad way to fight these things. And everybody wants to be Robin Hood, and that might not be the best way to do things. Like, we need to make government systems obsolete in order for people to realize, oh, I don't need to participate in these things anymore. Like, this is actually why church is voluntary today. Like 500 years ago, if you didn't pay your tithe to the church, you'd be fined. You'd be in trouble for for not tithing correctly, And it's like, we got so good at the transmission of information that people realize, like, hey, that's really silly. Like, that's not what the Bible says, and they don't really have the right to punish me, and all these different things, And now it's like, now you get to go to church if you want, you get to tithe if you want. But if they were to say, hey, like if they were to come knocking on your door that you didn't pay your tax tithe to church, you just laugh at that. You just slam your door. And like, if they kept knocking and call the police or whatever. And we need to do the same thing with government. We need to make government obsolete by making their control over information less hegemonic. And it's the way that people are going about it, I think, is bad. Not the least of which is the fact that they're just plainly going about it inefficiently by having networks that don't have the efficiency to really compete. So that's a big part of my worldview in general.
Well, I guess more on that would be, kind of moving away from it a little bit, but tainted coins. So, exchanges like Binance actually mix up coins. So what are your thoughts about tainted coins? And specifically, do you think that since Binance is known to mix up coins, that they could be inadvertently laundering coins? Do you think that could be part of the crackdowns that we've been seeing with them recently?
100%. I think it's probably inadvertent just because of the volume, but I think that there's also probably just the malicious dealing of that. Like, if I needed to, like if I was some kind of millionaire or billionaire or whatever and needed to launder some BTC, like where would I go? I mean, I would probably reach out to finance first, frankly, and say, hey, if I make a deposit, can I get somebody else's coins back out the other side? You know, like that's the obvious way to go about it. So I think they probably do have some nefarious relationships. And then a lot of it probably just happens just circumstantially. Like it'd be the same thing if I was just any guy, you know, doing a little bit of, you know, semi-criminal or very criminal stuff. I'm probably using finance anyways. And then my coins are there. And then, you know, me or you go to withdraw some coins or whatever, just because we're like, hey, I'm going to get in on this thing. And I've just withdrawn coins that have a completely traceable history
Right.
of, you know, human trafficking or whatever.
Or whatever.
And then if if I go to spend them in a decade and there are like systems in place that track these things in the future, I go to buy my coffee and I get the police, you know, sir, you need to come with us. Like you need to explain to us where you got these coins and all. And it's like, holy cow.
Or just have them seized from you.
Absolutely. Well, I mean, that's what the police do now. I mean, if you get pulled over and you've got $2,000 in cash, the cops take it and say, hey, fight it in court. If this money is clean, get a lawyer and get this money back. You know, it's like, wait, hold on, you know, like with what money, you know?
Right.
So no, it's a big problem. I think CoinJoin is an even bigger problem. So these are like the things used by like Wasabi Wallet and some of these other things that just have mixers in them.
Mm-hmm.
I think it's a big problem. I think it's very bad. I would not use a CoinJoin style mixer at all ever. It's all risk. If you're especially if you're a normal person. If you're a criminal, then you know, by all means give it a shot. Like you might do okay, but for normal people, like, oh my gosh,
absolutely
like you're literally just throwing money in a pot and grabbing back out of it with literally the worst people on earth, and then you've done a transaction with them as far as the blockchain's concerned.
Right.
So, no thanks.
I don't blame you one bit. So I guess moving on, I hear a lot of talk, and we've seen a lot of development in like DeFi and CeFi, and a lot of people. This is kind of going back to the decentralization thing and everything else. But there's a lot of people. Whoop, I lost you. Oh, there you are. There's a lot of people that just don't understand what DeFi is, what DeFi means or CeFi means, and with the markets progressing, markets like the NFT market and everything else. Where do you see all of these markets taking us? Where do you see DeFi specifically taking us? And how would you describe the differences between DeFi and CeFi to our viewers?
It's a good question. I struggle with it myself because I actually think DeFi is another one of these things that I think is a really good idea conceptually, and it's been implemented really, really poorly. The way that it works today is almost entirely based on token inflation. Like nobody can just pay 12% interest week to week, and that kind of, you know, the kind of gains that you get by just staking your coins with people. And like, if it was possible to make this money with normal monetary systems, banks would do that. They would compete for your money in that regard. So then when some, you know, allegedly decentralized protocol comes out and says, hey, if you stake with our pool, we'll do all these things, and you know, don't worry, we're lending to normal people, and maybe we're lending a little to Bitfinex, and maybe we're lending a little to, you know, all these different things, and you get the money on the other side for leaving Ethereum plus random tokens on, you know, in our wallet. You know, like, it sounds great, and for a lot of people, like, I mean, imagine holding Lend token before it turned into Ave token or whatever. You know, I mean, you've made incredible money on just holding that stuff, and it's great. I'm really happy for the people that have made that money, but we need to ask ourselves, why did that increase in value? Like, have they lent it out to that much or that many more people? Like, is there a profitable business in there, or is it literally just, well, there's some stuff that happens in the middle, we're running a bunch of algorithms, and we're inflating money, like we're creating this inflation that we can dump on the market, but as long as you hold your tokens, it just kind of locks up liquidity. And they're basically playing a lot of games with liquidity that I think are really problematic. And if your bank did them, you would call your bank scammers. And so I think a lot of that is probably going to fall apart if this bear market gets worse and persists, and the longer it goes, then all of a sudden we'll start to see some of these like, hey, we had a like, hey, you're only allowed to withdraw X amount, this and that, like please don't withdraw more than this, or hey, we're gonna have everybody, like we're gonna limit everybody's withdrawal to this amount week to week. And like when you start seeing that, that's when it's time to like, okay, like you may have even missed your window to get out at that point.
Right.
Which is actually kind of what we're seeing with finance. Finance keeps lowering the amount you're allowed to withdraw, which is a major telltale sign that they are seriously insolvent. And I think we're going to see similar things with DeFi. That being said, DeFi, the principle, this idea like individual peer-to-peer lending, that you can open up an escrow between people that is enforced by the blockchain, and let anybody actually be a lending bank, or let people pool and collectivize and become lenders. I think that's awesome. I think that's a really disruptive concept. But people just need to have really rational expectations. Like you are not going to be better at being a lender than JP Morgan. They've been doing it for 100 years.
Right.
Like you're not going to figure out how to make more money than them unless you're willing to be more risky or more scammy than they are. And that's when it ceases to be interesting. If you've only got $5,000 to contribute to a pool to lend to people, you're gonna make like $5 a week on it, and like that's not super sexy, but it's the kind of money you deserve to make as a low-level lender, And so people just need to have their expectations normalized, and realize that the way that things are done today is based on hype, but they cannot last. This is not the kind of thing that we can build the economy of the future on. It just doesn't work, unfortunately.
Well, I don't know what to say about that. That kind of just blew my mind a little bit, what you were talking about. That definitely puts it into a perspective for me there. But I guess I know you touched on Taproot earlier. I want to kind of go back to that for a second. So I believe Taproot comes out in November. How do you think Taproot is going, Bitcoin is going to perform after the upgrade with the introduction of privacy and smart contracts? And how do you think it will perform against Ethereum's EIP 1559, 2.0 rollout, whatever? How do you think they're going to fare?
Well, small blocker like BTC maxis are going to treat absolutely everything as a victory. Doesn't matter what happens, it's time to crack the champagne bottles and say they won again.
Right.
Taproot is not a particularly interesting piece of technology, in my opinion. None of it is based on anything particularly new. Schnorr signatures and some of the stuff that's bundled up into it are actually really old pieces of technology. And the reason they're getting added to BTC now is because their patents have expired. That's how old the tricks are that are getting bundled into Taproot. And now they're open source because they're just publicly available, because Schnorr is no longer a profit center for the people that held the patents on it. The other thing that I think is problematic about it, the thing that I think is problematic about everything in the BTC space is the fact that the upgrades occur by soft fork, which is basically democratic governance. It's you're signaling with your node. You're basically putting up a flag and saying, I am pro Taproot with my node. And I don't think hard money should be democratic. Your money shouldn't change every 3 years. Like we just had the SegWit upgrade in 2017, and that was a major protocol change.
Right.
It was a change to the way the network was governed and all these things. And then they're doing it again. It's not even 4 years later, and
here we are.
Now there's this other major protocol change on this thing that is supposed to, everybody's it's sound money. It's never changed since 2009. And like, no, it's changed really, really significantly. You guys are just being tricksters about it. So they'll treat it as a victory. The one thing that is interesting is the fact that it regularizes address types so that people won't be able to tell, like, is this a multi-sig wallet? Is this a single user's wallet? Is this some kind of greater set of scripts that is running some kind of smart contract or token or whatever? All the hashes will regularize so that it's impossible to tell what sorts of transactions are happening based on just like today, like if the hash or if your address is a 1, that's a legacy Bitcoin hash. But if it starts with the the BC, that's I think it's a native SegWit. And then if it starts with a 3, that's typically a P2SH, multi-sig transaction, all this stuff. But Taproot regularizes those things. So it's just a little bit harder to do the detective work and figure out how people are holding their money and stuff on BTC. And so like, yeah, that's interesting. That's an interesting privacy feature, but it's funny because all of those other address types were additions to Bitcoin. Like it used to be that all address types were regularized in Bitcoin. They all started with a 1 and they all had a random hash. So we're getting back to the pre-2012 version of Bitcoin where address types were regularized at all times. And so, they're acting like that's revelatory, and it's like, well,
Not really.
right. Yeah. Like that's a backpedal back to like the brilliance of Satoshi. Right. And, yeah, go ahead.
Well, I know, speaking of SegWit, going back to 2017, there was a lot of what people called FUD at the time. Okay. And I'm sure you remember it, but there was a lot of news coming out talking about how BTC could collapse because of a thing called chain death spiral. Could you explain what chain death spiral is? And is it true that Tether saved it from collapse in 2017?
I mean, maybe. I think Tether's been saving. I think Tether's been saving BTC for a very long time. And for anybody that wants to debate that, you can correlate market cycles based on Tether prints. So if Tether stops printing like they have for the last 3 months, we've had nothing but bearish action on BTC for 3 months. So like they're very, very closely correlated because it's almost all of the liquidity in the entire market is Tether BTC. So whether or not they saved him in 2017, they may have.
So you think Tether has BTC on life support essentially?
I would argue, yeah, absolutely. Like the demand for BTC never really made this kind of sense in US dollars. And it's only been since Tether showed up that we've seen, the bonkers pumps and again, it's that close correlation to each other. That indicates that what is real. If you don't know what the inflow of capital actually is, so you can't measure real demand, and then it's all smoke and mirrors there, and that's really, really bad. As for chain death, I mean, there's a couple of ways that this can play out in BTC. I think the most interesting one, which probably wasn't relevant in 2017, but is more relevant now, is when hash power gets really, really high, it brings up difficulty. So the difficulty, the amount of work that is required to mine a block goes way up. And now it's up at around the place where if it were to have a really precipitous drop, a really fast drop in hash power, you'd be unable to find a block in BTC. And so because of the way BTC works, like you must find blocks in order for things to be settled, for the network to even persist, because you can't trust a BTC transaction until you've had like 6 block confirmations or whatever. Not finding blocks for a long period of time destroys the entire user experience on BTC. And then really the only way to fix that would be a hard fork, frankly. You'd have to hard fork and just pick. You'd have to pick a change to the difficulty adjustment algorithm, because the difficulty only adjusts by finding blocks. So if you can't find a block, you can't adjust the difficulty and you're stuck. Like you have mined a block and that's the last block you're going to get until either, like at that point, hash power would either have to go up, but they'd have to go up at a huge loss. Like somebody would have to just say, okay, I'm willing to lose $1 million a day until I find a block or whatever. And so that's a possible chain death scenario. The other problem then is, I mean, that would cause a run, like people would sell, and then we'd actually see how much real liquidity there is in the market. Because if people wanted real dollars and your exchange was running on 97% Tether, like almost every exchange is, then well, where do those dollars come from? If you can't redeem your tethers for dollars and you can't redeem your BTC for tethers or dollars, or and it's
right,
it's kaput. So I think it's a lot more fragile than people think.
Well, speaking of Bitcoin's fragility, fragile, sorry, I'm a dork. What would there's been a lot of technological advancements, and it seems like every 10 years we're seeing huge leaps. And with the introduction of like quantum computing, what would you say might happen to Bitcoin in particular if quantum computing got to a point where it was able to break the security of Bitcoin SHA-256?
I think quantum computing is fake news, like
Fake
almost
news.
entirely. Yeah,
Okay.
it's interesting technology, and at some point it may exist, but we are several human generations away from it. Like, it is not a problem that we will ever need to solve.
Hmm.
And in all likelihood, like it's very, very specific. So quantum computing has to be programmed to do very, very granularly programmed tasks.
Mm.
So if you're programming a quantum system, like, you need to pick a target. You need to have a thing that's worth attacking. And there are so many more things that are more valuable to attack than Bitcoin. And then the problem with trying to attack Bitcoin with quantum is that there's been more research done on securing SHA-256 than almost any other encryption algorithm on Earth, by not almost any, by like a huge margin. SHA-256, it becomes so much more difficult to mess with SHA-256 every single year because of Bitcoin miners. And so if anybody were to figure out a way to quantum mess with SHA-256, it would likely be a Bitcoin miner that made the discovery. And then at that point, the most valuable thing for them to do is just be a really efficient miner and earn a bunch of money. So I just don't think it makes any sense at all. I think quantum really is it's one of those things that sounds really scary if you don't understand how it works, but it's a problem too that you can 99% solve the problem. It's kind of like the Richter scale. Like an 8.0 is like exponentially smaller than an 8.1 earthquake. So it's the same with quantum. Like, you can solve 99% of the equation, but the last 1% is like 10,000 times more difficult than the 1% before it.
Makes sense.
So it's just one of these things I just absolutely have zero worry about.
Fair enough. Fair enough. All right. Well, let's talk about some BSV. So in the past, you were, if I'm not mistaken, you were a huge advocate for Bitcoin Cash in the past. Why did you make the change from Bitcoin Cash to BSV? And what are some things that BSV can do that, other blockchains just can't?
Sure. Basically, yeah, I've been a big blocker since 2015. As soon as Bitcoin XT came out, they were like, hey, we're going to let miners mine 2 megabyte blocks on Bitcoin. I was like, yep, I'm on that team. And it's funny because I thought it was really obvious, and it turns out that it wasn't really obvious to a whole bunch of people. But yeah, in 2017, I was very pro Bitcoin Cash because they wanted to allow people to compete to mine an 8 megabyte block. So I was like, yeah, let's do it. Like, Bitcoin needs to scale on chain in order to do anything that it needs to do in the future. And then at some point in early 2018, it was like 6 months after the split, all of a sudden we were having a block size debate again in Bitcoin Cash. Like, half the community roughly was like, okay, well, let's upgrade again. Like, let's get to 128 megabyte blocks. And then half the community is like, why? Like, we're starting to create this. It's all of a sudden we're having a big blocker, small blocker debate again. And so for me, I was just like, I'm just not having this debate ever again. I am going to stick with the big blockers every single time here, because if we're going to have a sound money that doesn't change, makes the world a better place, it needs to be set in stone and allow miners to compete to mine whatever size block they want to mine. So BSV, its major superlatives are not just the block size limit, which is non-existent. There's no protocol level block size limit. It's not a gigabyte. It's not a terabyte. It's not a petabyte. It's not a zettabyte. If I want to try to mine a block that is 1 million gigabytes, I can attempt to mine that block, and it's up to other miners on BSV. It's up to other miners whether or not they want to accept it, and they can try. And if I fail, then the transactions that were in there just get split up into other blocks. They just get split up into, all right, let's just do a bunch of 10 gigabyte blocks until we just gobble up all those transactions. And so it's able to do that, first of all. So it's an actually competitive mining economy. It's the only one in the entire blockchain space that has a truly open and competitive mining economy. But I don't think that's actually the most interesting part. The most interesting part is the non-standard script stack.
Oh.
What people don't understand in Bitcoin is that it was designed with a Turing complete development stack, meaning that you can deploy applications in Bitcoin, built on Bitcoin, and they can do all kinds of things. They're powered by transactions. You can build video games. You can build whole business models in the Bitcoin stack. And that's been deprecated from BTC. It's gone, almost. It's very dysfunctional. BCH has actually taken some things away and added some other things to the stack. But BSV doesn't even require standardized language in the stack, meaning like some people like to design their websites in JavaScript, and other people will choose HTML, and other people will choose CSS, and various other things. And that's how you can design in BSV. You can say, you know what, I want to make JavaScript tokens, or I want to make, whatever, like pick your language, do what you want with it. Every other blockchain requires you to use a standardized language of the choosing of essentially the lead developer, and you're stuck to, here's how you have to design something in Ethereum, for example. And in BSV, it can be like, no, I'm a CSS developer. I'm like, okay, well, design it how you feel like designing it. Like it will run. Like there's no check on like, here's the way you have to do BSV. It's like, it is a general purpose global supercomputer that is infinitely scalable right now. No
Right
roadmap,
now.
no like, hey, in 6 months we're gonna have this cool thing. Like, no, go build
Right
it.
now.
Go build the business of your dreams that uses everything you've ever heard rumored was possible with a blockchain, possible today. Do it, build it, go. That's BSV.
Well, I've definitely heard about a lot of interesting things coming out of the BSV community. One being like Twetch. I thought that was interesting. There's been a lot of content creators that have just, even recently had their sites taken down and everything else. And then, Twitch kind of solves that problem. It's like, no, you can go on there and you can build on there and it's yours. It's there forever. It's on the block. Yep. But on the flip side of that, I also hear some, I guess, concerning things coming out, and not so much concerning, but I hear that I've heard about this ZeroSat transaction and how BSVers are kind of concerned about how it might break miner economics. Do you think you could explain that a little bit?
It's pretty ethereal. It's a little bit of a weird, it's like inside baseball in a big way. But basically, the way that the protocol is designed, in theory, and not, you can just do it. It's been done on BSV. Is what you can do is you can create a token that does not change the set of data on the ledger, which is called the UTXO set. So you're not making a change to the Bitcoin ledger at all, but you are transacting tokens that are basically just up in the stack. Like I said, it's because it's non-standardized and it's so flexible. In theory, you can have a miner enforce a token contract that doesn't even make transactions on the ledger at all. And it's just sort of an extra thing that you can do for something that you just don't want to be a financial transaction. And one of the best things I've heard explained with it is that you can do voting, for example. Like if you were to do a national election, well, that would cost a lot of money, even if everybody was just paying like a penny. Well, there's 350 million people in the United States, so it's 350 million penny-sized transactions. Like, all of a sudden you're adding a bunch of costs to this election that it just doesn't really have to happen, because if you can get, let's just say 2 or 3 of the biggest miners on the network to agree, like, okay, let's just allow them to not utilize the UTXO set at all, but we will enforce their identity tokens on chain, even though there's been no value transacted, because we're doing this special purpose thing, this election. we'll just do that. And so that seems like a very reasonable thing to do with that concept. But then you have a very vocal group of people who say like, no, because if you let people start to use the network without doing any value transacted, then everybody's going to be asking, well, hey, can I make a special deal? And can I do free transactions? And then it kind of like, the fear is that it becomes this tragedy of the commons, and that ultimately it's like, who do you say no to? And I'm on the fence because I can see the value of both arguments.
Mm-hmm.
I don't know what the best decision is to make. I know that I have big friends, or I have good friends on both sides, really, who've tried to give me the red pill as to why their thing
right.
matters most. And yeah, and I'm just kind of like, man, I don't know. I'm not going to take a hard position on it personally, mostly because I respect the people on both sides, and I don't want to say, I really genuinely don't know who's wrong,
right?
Conceptually. So, because again, I can think of like big business models that utilize both for all kinds of cool things. So it's I mean, it's not something that will lead to a civil war or anything like that. It's if you can do it, you can do it, and that's kind of how I feel about it. Is like, it's a free market system, and if I have a $1 million client that's asking me to do this, like, I'm probably going to get on the phone and call a couple of miners and say, hey, can we make a special deal here for this huge client? And I don't know why people would say no to that.
Right.
But
well,
people
I
like
guess,
to argue.
yeah, it's definitely interesting stuff. I'm having a hard time wrapping my brain around it personally. I mean, it's a lot to take in, but I have been looking into it and just feeling my way around, and I can't say that I've come up with a conclusion either. But there is a lot of things happening with BSV. A lot of controversial type of stuff as well. With Craig Wright saying he's Satoshi, and then you've got the Copa and the Roger Ver versus BSV, and then the Cobra and Bitcoin.org type thing. Do you think you could give us like a quick recap of all of that and what's actually going on with all of those lawsuits and the litigation?
Yeah, I mean, it's a million things at once. I think the first important thing to understand is that Craig didn't come out and say he was Satoshi for a very long time. He was doxxed initially in it was 2015 by Wired and Gizmodo magazine, who both have not released the evidence that they received that led them to believe that he was Satoshi Nakamoto. So he was put in a position where basically he was having microphones put in his face and saying, hey, we figured out that you're Satoshi. What's your, and to him, he denied it for a good amount of time, actually. And then stuff went a little screwy because when they asked him, like, well, what's your opinion about Bitcoin? And he comes out and basically says the same thing I do, like, well, Bitcoin should scale on chain and it should be tokens and smart contracts and being able to create decentralized autonomous corporations and all these different things all in the stack. And it was like the unpopular version of the Bitcoin debate at the time. And so all the powers that be were instantly like, nope, he's not Satoshi. I don't even care. I don't care what evidence I see. Like, Bitcoin is the store of value technology and that's it. And now he's against that. And so we're against him. Then it went bonkers because he decided, okay, I'm going to do signing sessions for a couple of important people first, and then people didn't like the way that he did them, and so then he was being criticized for that, and then he retracted. He was just like, you know what? And Craig is very prickly, so it was very much a like, fuck you. I'm not going to be in the public anymore. You've missed your chance to ever talk to Satoshi again. And then it's just been one thing after the other of, what happens next. And really the big thing that happened next was that Ira Kleiman sued him for Satoshi's Bitcoins, which is like 1.1 million Bitcoins that have never moved. And so then he has to hire a legal team to fight and prove here's why they're mine. Here's why I am Satoshi and Dave Kleiman was a contractor to Satoshi, and all these different things. And so I think it's funny that people say like, he's a fraud. And it's like, well, somebody's spending millions and millions of dollars a year on attorneys to get Satoshi's coins from Craig. And, there are piles of legal teams that have sifted through the paperwork and decided, yep, we're suing Craig for Satoshi's Bitcoins. And then a lot of people don't realize this is that Ira Kleiman has actually already sold the potential proceeds of the suit to another consortium of people who have looked at the evidence and also believe he's Satoshi, so much so that they bought the rights to the coins if Ira were to win them. And so there's actually a lot of people that have seen a lot of evidence that is not public and have said, yep, we need to get Satoshi's coins from Craig. So, then that's everything else. That's, Roger Ver being part of I guess I'll call it a cabal, like a conspiracy to split BSV nodes off of Bitcoin Cash. And then the thing with the Bitcoin org, Cobra, and the white paper and all of that. I think that's actually some of the more interesting stuff, because ultimately what Craig talks about is that Bitcoin's a couple of things. Bitcoin is the coin, it's the money, it's the thing that you understand it to be, but it's also the name that Satoshi used to describe the protocol to implement such a system. And so it's just like with MySQL, the databasing technology. If I change MySQL in some way, I have to change the name of it. So if I change anything, if I change one line of code, I can't say that it's MySQL. I can say it's based on MySQL, but it's MySQL Kurt version B, And the fact that BTC is able to go through these governance changes and these major things that I've told you earlier, like SegWit and Taproot, like these are fundamental changes to the protocol, but they don't change the name. They don't say that this is Bitcoin SegWit version and this is Bitcoin Taproot version. They just say Bitcoin, we're Bitcoin, BTC's Bitcoin. And it's like, yes, but my money is fundamentally different than it was 3 years ago. And that one was fundamentally different than it was in 2013, the last time there was like a serious hard fork event and all this. It's like, that's not right. You're not supposed to do that. So Craig flexed his copyright on the white paper and said, hey, you are telling people that BTC is representative of the protocol described in the white paper, and it's not. You have gone through these various governance changes and you have not specified to investors that the protocol has changed. And the UK court upheld it because nobody fought him on it and said, he's right. Nobody's here to debate. Nobody will fight him on whether it's even his position to debate it. So he was granted default judgment. Bitcoin.org had to take down the white paper for residents of the UK. So officially in the UK, the answer is BTC Bitcoin, and the answer is no. The Bitcoin white paper describes a protocol which doesn't exist anywhere, but probably like the closest thing to it is BSV. BSV follows that protocol spec that was created by Satoshi Nakamoto in 2008. And so that's a big part of why he's hated, because there's $1 trillion tangled up in BTC being Bitcoin. But
well, he's also, and this is exciting, but Craig has also come out and made some inflammatory comments about, a $1,200 BSV price point and sure, how he might invest some of his earlier coins into the ecosystem to try to boost up BSV. But why would he make such an influential claim, knowing that for legal reasons, he can't even touch those coins for right now?
Honestly, like a lot of people really struggle with this, and I don't, mostly because I have really weird upbringing. You don't get to choose your parents, I think is the best example for this. And if somebody ever came, from an abusive home, for example, and they could say, you know what, my mom is my mom, and I don't like her, and she doesn't do things, like she hurts me and all these different things, but she is my mom, and I can't change that. And so I think it's a lot the same with Craig. Like Craig is a very difficult person. He's very combative. He likes to fight with people. He likes to be right. He's not good when people challenge him on different things. And like he's a man with serious character flaws, but that doesn't change the fact that his rights are his rights and his property is his property and all these different things. And I do happen to believe that Craig Wright is indeed Satoshi in the way that he explains that he is. And it's just like that. It's like, you know what? He's hung up the phone on me. I mean, he's a, he suffers from Asperger's, and it makes him very, unpleasant at various times. But it's like, you know what? I have this working relationship with Craig, where we talk about different things, and I've come to understand, like, you know what? I don't get to choose who Satoshi is either, and not asking him to help me raise my kids or start a business together or anything else, but this is the prick that made Bitcoin, basically. And like, as inconvenient as it is, like, it's just that's reality.
Yeah,
right. So
I just had the two questions left, and one of them was so do you think Craig Wright, or Satoshi, however you want to look at him, do you think he'll ever be able to touch his Tulip Trust or use it or move it or whatever after all of the court cases are over?
I do. A big part of it, right, is that the ownership is under contention. Like, I think there's lots of problems there. But when that gets cleared up, like when it's decided, like, no, Craig is the rightful owner of these coins, he was the rightful creator of the protocol, there's no multi-billion-dollar lawsuit that says otherwise, then by all means, they're Satoshi's coins. So
how do you think that'll impact the space, though, if all of a sudden those
it's hard to say. I mean, we've seen just rumors of Craig doing things, make the BSV price go up 400% in a day. I don't know. I mean, he's said conflicting things about how he'll treat his BTC. Like he said, I will only own BSV after a certain point because I'll sell the BTC and BCH and those kind of things. And I don't know, if he were to sell 1 million BTC and 1 million BCH and things, I mean, it would decimate the markets, especially if he was buying them. Like, if he was swapping them specifically for BSV, we would see probably a flipping in price. But if he were to try to sell them for fiat, I think it would just collapse, frankly, because, like I said, that liquidity is almost entirely Tether. And it's just.
So what are some exciting things that you're looking forward to in the space? Are there any exciting dates you're looking forward to? Are there any secrets or predictions that you could hint at? Anything?
Mostly just continued development. I think one of the things that I was excited about for a long time is a game called Crypto Fights. They were a project that left Ethereum about 2.5 years ago and just launched on the mainnet about a month ago. And they've made 500,000 NFTs in a month on one game on BSV.
Wow.
And they cost less than a penny each to mint. And people are already turning around and selling like their battle axes and their different stuff on the fixed marketplace, all on BSV, all on chain. All these things are going on right now. So I'm excited for that to show up at like the next big esports conference, and like, let's bring in another 100,000 gamers and that kind of thing. And and that's just one app. Like you mentioned, Twitch. I'm excited for the stuff that they're working on. I'm personal friends with the founder.
Oh, cool.
And the guys that built the company. So I'm real excited about some of the stuff they're working on that I've kind of been hinted about. And I'm excited about a bunch of the people that are working on all kinds of things. There really are enterprise grade applications that are integrating N-Chain, that like the biggest company in the BSV space, is kind of transitioning right now from being a research and development company and becoming more of a product company. And they just released they call it Kensai dashboard. And what it is, it's sort of like blockchain dashboard for corporate users. But it's not just like a development kit. They launched with a client. So they launched with a company that's called Company, but with a K. And they're a global identity solutions provider that is going to be using DSV as a way to hash private identity data on chain with every cycle. So they're not just coming out with a product and be like, hey, we can use this for business. It was, here's our product launch. We've been working on it for 2 years. We've been working on it in collaboration with this prospect who is now a client. And over the next 3 months, this client is going to be pushing things. So I think a lot of the people have been laughing at people like Craig and Calvin and stuff for years now, and just being like, it's just a scam. They're just making all this stuff up. Nothing's ever going to happen in DSV. And over the next year, it's going to be like, okay, they have a portfolio that includes like, Fortune 500 companies that are using DSV as a data tool and all these different things that everybody has always said is impossible on blockchain. And it's just not. And I'm looking forward to proving it to the world again that Bitcoin can scale. The Bitcoin protocol is infinitely scalable, and that we really can change the world with.
And when you say Bitcoin, you mean BSV? I'm sorry to interrupt.
I do.
Yes.
No, the BSV is the only complete and restored version of the Bitcoin protocol in existence today. Everything else is some deviation away from that in some way.
Right. Well, Craig, well, Kurt,
hey.
I've got Craig on the mind, I guess, but hey, Kurt, I really do appreciate you coming on and chit-chatting with me today and sharing your wealth of knowledge about everything in general. And I can't thank you enough.
No, for sure. It's been a pleasure. Thanks for having me.
All right, bud. Well, you have a good night.
You too.
So that's going to wrap it up for today, everybody. If you could leave me a comment down below about who you'd like to see me interview next and what kind of questions you may want answered, leave us a comment down below. And don't forget to like and subscribe, and we'll see you next time. Bye-bye.